Well, as always, guys, let's not waste any time. Hop right to it. We're going to start, of course, with the 10-year. We are looking at the daily chart. We have been tracking the potential for this head and shoulders pattern, which it was, and all it did was give us a peekaboo. Now, this is very important because it had a lot of confluence with what happened in the broad market. So, on what many thought and expected, including myself, for this to be the bottom for the 10-year, we got some massive rallies here and put in this head and shoulders pattern, implying a massive break to the downside, which is imply massive bids in the 10-year, which would imply, of course, lower and lower interest rates. Well, we essentially got this peekaboo and it reversed on everyone, okay? And that's not a coincidence with the timing here of what happened, because this is about when the bear market rally really started to lose its legs. So when this started to go up, you started to see the market conditions change. So first of all, this has always been our target. This 4,200 was our target for the bear market rally. Okay, and we called it. Once we got it back down here at 3,600, I had a big video about this. I talked about the historical precedent for the extent of the sell-off and how big it was historically in terms of times and depth and all this kind of stuff. So that was a good spot to mark the rally, and so we got it. And our target was 4,200. Well, notice that we hovered at 4,200 for a while until we got that CPI number. It's not a coincidence. The market was waiting for that. Well, once it came in, quote unquote, cooler, right, the market broke up on it. Well, I think it's kind of like this. You know the dog that chases the car, right? They bark and they chase the car. Well, they don't know what to do if they ever actually catch it, right? Well, I think that's kind of what the market did when the CPI numbers actually kind of rolled over. It's like once it actually happened, everybody said, all right, it's going backwards. And then everybody kind of realized, well, but it's still super high, right? It's like the last time it was this high, it warranted higher interest rates. But now it's what? We can party now. And I think the market's kind of realizing after the fact that things are still really bad in terms of inflation, and that this actually is not good news. Things are actually quite bad. Food prices are soaring. They're out of control. Blah blah blah. Long story short is that I think we have reached the end of the bear market rally. Now we will monitor this to see if we hold these crucial levels. I mean, technically, if we come out to the weekly chart, you can see that we closed above the 50, but we did back here too. And remember, we talked about the possibility that we would break this 50 because why not? We did it back here too, right? So it made sense that we could do that, and we did, and we have hit clear resistance. And so we're going to come back and test this probably next week, and if we break it, that's probably it. I mean, I don't see it breaking and then coming back up. I mean, if it breaks it, it's probably going back down. This has broad implications for all the things that we're investing in. We're going to talk about uranium, gold, silver next. But I will tell you, the broad backdrop is starting to turn more negative. The Fed is winning the game of chicken with the markets. The markets are pricing in for higher rates. Again, there's a difference between the fundamental reality of this whole situation versus the narrative behind it, which is to say, there is a quantifiable mathematical ceiling to how high the Fed can raise these interest rates, okay? Because the sovereign debt prevents interest rates from being too high. Otherwise, the federal government will not be able to pay those payments on the debt. Okay. And remember, as these asset prices collapse, all right, as prices go down, right, the tax receipts that the federal government gets from these assets also goes down. At the same time, the Federal Reserve is making the cost to borrow the difference to fund the government go up. You can see how this is not sustainable. Right? This is going to end. The Fed will at least stop raising interest rates. Now, I don't know what that interest rate number is, but the lower the asset prices are, the lower that interest rate is going to be, right? So just understand that and keep that in mind that, the Fed's winning this game for now, but it is going to be short-lived. Remember, everything else in the rest of the world is breaking a lot faster than it is here at home. Okay, it would not surprise me that if the next domino to fall or the first domino to fall that causes the next crisis in markets, both here and abroad globally, right, drops somewhere else outside of this country. We're all focused on lots of things here at home, and I get that. I appreciate that. But the rest of the world's a lot weaker than us, all right? So I think we need to be looking outside for those catalysts I think it's probably coming soon. You can feel the pressure in the charts and then the bonds and the debt. Everything's coming to a head. So whatever that catalyst is, I think it's coming. But how does it apply to us? Well, let's talk about uranium. So in the case of uranium, we're going to start with the spot price. I very seldom talk about it, but we're going to today because I'm noticing confluence. And remember, the key word in being a technician is always confluence. Confluence is what's going to make you right. Confluence is how you can be confident. Confidence, beyond all other things, is most important. It allows you to be accurate. It allows you to be bold. And we're going to show you another example of this right now. So in the case of the spot price, I have just outlined the highs and the lows in both price and RSI. And you'll see that on both ends, there's divergence in both ways. Now, why is this significant? Well, when you have divergence on the top, so on the case of price, you have a higher high and then a lower high, right? You see that? Clear divergence. This was telling you that on this ramp up in price, it was going to sell off, right? Because you set a lower high on the RSI. That was a sell signal. Well, consequently, you have the inverse on the bottom. And on the bottom is where you see your bull signals. So as the price sets lower highs, the RSI sets lower lows. So this is a hidden divergence. This is telling you that despite the sell-off, okay, at the top, you can continue to see the trend proceed. Now, what is the trend? Well, if you go back as far as what? November 2016, the trend clearly is up. All right, it is in a bullish pattern. So you can expect over the long term that this is likely to rebound and take another leg up. This is what this is telling you. All right, and then why am I showing you this in the spot price? Well, in the case of the equities, they were telling you the same thing. In fact, this was part of the reason I was able to so aggressively, so confidently tell you to buy along these trends, because the RSI was telling you that despite the sell-off for the same reasons. Just look at this with me for a moment. Do you see how Cameco set higher highs on price as it set lower highs on RSI? Okay, well, it's not a coincidence that every time you set a higher high on price and a lower high on RSI, you sold off. Okay, every single time. So this is how this bull channel is working. All right, it's working in this divergence. All right, so why this is crucial is because now you're coming back to the bottom of the channel, hitting support, as you're potentially setting in another lower low on the RSI. Now, something to look at here is that although we are clearly right at the verge of touching the trend here on the price, the RSI still has some distance on it. And this means one of two things. It either means that this whole divergence pattern is about to end, and it ended here when it broke for the last time, or we have a bit more selling to do over the course of the next week or two. We are actually going to fall out of the channel like we did here, maybe come down and test these levels, and hopefully set another lower low. If we can set a higher low here, let's say the last one was 2034. If we could set it at 2050 or something, right? Something like that, $21, and set a lower low on the RSI, this would be extremely bullish. This would mean that this entire trend is still in play and that we can count on a rebound in price. All right, doesn't mean it's going to happen tomorrow. It could take weeks for this to play out. I mean, we could chop sideways for a bit. We could chop sideways out of the trend. We could go straight down. There's a lot that could happen, but I'm just telling you that this is something to be looking forward to as an indication of what happens next. All right, and you're seeing it in confluence with the spot price. I don't think that that's a coincidence. I think it's very much worth paying attention to because we see it in confluence. In fact, if you zoom out on the monthly chart of Cameco, you see in the long-term big picture that we're doing the exact same thing there as well. So we still have what, another week or two of trading here in the month. So if we can hold by the end of the month, above 20, high 20s, low 21, and this RSI set a lower low, that would be extremely bullish. It may not look bullish, it may not feel bullish, but it's going to be bullish. All right, so that's the big picture look at the state of uranium right now using Cameco as a reference. But as we dig in and check the price action, we can see that just like I told you in the flash update, we have got once again another Wyckoff pattern, and we have closed at the area we had talked about in just the previous update. It's not a coincidence again. Now, just like I told you on this sell-off here, We would come down and test that level, which we did exactly. Well, this is exactly the same thing right here as right here. It's exactly the same thing. And what happens after Wyckoff? Well, it tends to be accumulation, but you need to watch, okay? Because the broad market could roll over a bit. We're going to pay attention to it. So here's what I think. And this is going to take a little bit of an explanation. So you're going to just have to sit down, bear with me, and listen to this. But I think I've realized what's going on. So remember during the last sell-off when this rolled over, and once the prices really started getting down here, I noticed something. I noticed that equities like Cameco, UEC, NXE were holding up quite stubbornly, where some of the smaller names, some of the over-the-counter names, some of the smaller market caps were falling substantially lower than their Wyckoff level, right? So Cameco was still up here when, global or whatever was down here. There was a divergence. And I had pointed out to you guys on Twitter and in the videos that I had seen this before. I know what this means. It means that the leaders are too strong to catch down, and you're not going to get that rebound until they do. They have to come and test those levels. So this is critical because this time is actually playing out a little bit different. So in the case of Cameco, I want you to show you here that we are already at the cusp of touching this trend line in this bull channel. But if you look at something like UEC, we still have quite a bit of distance to go to even touch it. In fact, it's about 15% lower just to kiss this trend line. Cameco only has, what, a couple of percent, 1.5%, 2%. All right, what about NXE? NXE looks just like Cameco. It only has a couple of percent left to go, 4% to hit that trend line. So what does that mean? Well, for one thing, UEC, as I had pointed out in the past, is actually quite strong technically. In fact, it's actually stronger than Cameco is on a technical basis, and it has been for a while. UEC is on a technical basis becoming my favorite to track momentum within the sector. Okay, even though I would prefer to personally own Cameco for fundamental reasons, UEC for technical reasons is becoming better to track the sector. Okay. Now, here's how I think that this could play out. Because of this divergence, because UEC has so much further to fall where NXE and Cameco are so close, I actually think we might get a break. I actually think that Cameco could break this channel and come down and try to tease these levels here, all right? That makes total sense to me. In the case of NXE, I think you're going to see the same thing. I actually think we're going to break the support and come down and touch the 200. I really do. Because if you look at the percentages that we need, it's about 12%. In the case of Cameco, what is it? About 9%. Okay, these are roughly the same. This is showing some confluence and strength relatively. But UEC has 15% to touch its trend line. So what I'm thinking may happen here actually is Cameco may actually lose its channel, break down, and come here. People are going to see Cameco lose its trend, get scared, and things are going to start overselling even more. So in the case of some of the smaller names like energy fuels, you can expect to see potentially a greater distance in depth, right? So maybe another 20% from here. And that's after the already 20% that it's already fallen. Because remember, I told you guys, I tried to point this out, that the smaller names were already hitting their target on this W pattern. And what happens on a W pattern when it fails? If you fail at the target, what do? You bail. Because why? It's going to sell off. And how much sell-off can you anticipate in a failed breakout of the W pattern? Well, you can expect it to come all the way to the bottom. All right? That's just what you can expect to see. And you can see it in global, right? It came up and it failed. And what do you do when you fail? You bail. I was giving you guys this advice right here. Way back here. No, it was like up here because I started predicting the double bottom and what you would do. And here we are months later, and this is exactly what happened. We came up and tested it and failed. And this is the basis for my yellow flag video telling you that I had noticed the new trend and that you really needed to consider taking profits in these things because we were failing the double bottom pattern, and a failure means substantial downside. So to sum that up, if you're not following with me, I'm telling you that once again, the big names have a little bit less distance to fall. Okay, in the case of Cameco, maybe another 10%, maybe UEC another 15%. Something like Energy Fuels may fall another 20%. Something like Global may fall another, what? Let's measure it, right? To come down here, another 15%. And that's after the 15 or 20 it's already sold, right? So these names are going to sell off a lot more relative to the bigger names. So once again, we are using the big names to find support to buy, all right? And again, I think that some of the bigger names like Cameco and NXE are actually going to lose their trend. I am actually looking at UEC now as a basis for when I potentially buy, and I'm looking something like this right here. But on an equity by equity basis, you can look for something like this potentially in the case of Energy Fuels. All right, we have this strong trend. You have some potential down here. I mean, if you just look at this, you might have an inverse head and shoulders. And we notice this kind of confluence in gold and silver. So you have a neckline here once again. Remember, that's what this was here too. You had a head and shoulders right here as well, right? And when we broke out, well, you might be putting in another one here. So if you come right here and start to rally and come up, what you're essentially doing is potentially putting in another head and shoulders pattern. See that? This is an option in the uranium space because there's confluence, because you can find this pattern taking shape in other equities too. So this is something we're going to be looking for. We're going to see, this is a reaction point, okay? We're at least coming down right here, okay? We just are. We're going to start testing some of these critical support levels. So if you can start to get a rally on something like this in Energy Fuels, and that tells me that we might be putting in an inverse head and shoulders here to come back up in a breakthrough, right? So if you're a bull, that's kind of something you're looking for. Otherwise, if you break, you're looking for a retest at this level right here at a bare minimum. Again, you're still watching the big names for support, but with that being said, you're looking for much lower levels. I mean, you're not buying today. I mean, the time to buy was here and here. I wish I could tell you with great confidence to buy here on this trend once again, but I don't think that's the case. I think Cameco is likely going to lose the trend. I think UEC is going to touch the trend. I think NXE is going to drop and touch the 200 on the weekly. And to be quite honest with you, that will be a good thing. It kind of needs to do it, right? It hasn't touched it since July of 2020. That's a long time, guys. That's a long time not to touch your 200. So doing that and getting a strong reaction would be very bullish. And again, look at the confluence of the RSI. So this is hidden bullish divergence as well. You're setting lower and lower and lower lows on the RSI as you are setting either flat or rising lows on the price. So if you can come down here and kiss this thing and set another lower low here, that wouldn't be the worst thing. Wouldn't be the worst thing, and especially if you get a rally with volume, I think that would look very bullish. It might not feel like it, but if you look ahead to these levels before they happen and anticipate the possibilities, then when it happens, you can strike on it, right, and take advantage with confidence. And that's kind of the key to this whole thing. The key to this whole thing. And you look just at the case of the spot price, okay? U.UN. It's putting in an ugly weekly candle here, all right? It's been denied on the 50, it's getting weak. It wouldn't surprise me at all to come down and test this 200. Once again, what's the last time you touched that 200? I mean, it was way back here, January of 2021. That's a long time. So you need to do it. I mean, you need to touch it, just get a reset, kiss your average, and move on. I think that if you can get this would be a very, very strong buy, especially if it were to crash straight down, because you'd have a double confluence of the prior support and the 200. So these are levels I'm looking forward to now. I think you should be too. I don't think you should be looking for an immediate rally or reversal. I think we're going to come touch critical support on an equity by equity basis. Some of them have further to fall than others. The smaller the name, the more it's likely to fall, in addition to how much it's already fallen. But this is the same case. You should know this by now. The bigger names are going to hold up better. But the bigger names still have a lot of downside left in them too. So what I would suggest to you is to watch Cameco to still hold this, 2075 level. UEC to come down and touch the trend line. You don't want to break 292, but that's a potential target right there. In NXE, look for the 200. It's about 322. And then we'll see the reaction at those levels, and you can use that as a basis of whether to get in or out of whatever else it is you're looking at. But again, we saw this developing and everything. It was clear as day, guys. You come up, on this W pattern. If you fail, you bail. And clearly this is why. This is why we talked about it. This is why I brought it up so many times, because that's exactly what it did. It failed, and it has a lot more downside to go. So in the case of an equity like this that failed its pattern, you're probably coming back all the way to the bottom. It just makes sense. That's typical of the pattern. Look at the confluence. Look at the confluence that popped up there on the weekly time frame. Going to touch that 200 again. That's just something that you should expect, okay? And so look at it as an opportunity if you didn't listen last time to accumulate on these strong buying opportunities. But we'll see the reaction there. We'll see what happens. But in the immediate future, you should be expecting more downside. I think our supports are going to be tested, and this is the way it's going to be for some time. Okay, guys, so in the case of gold and silver, I will point out that I've put a new lower bounds on the spot price of silver. I'm not necessarily worried about that in the terms of the equities. We'll see how it shakes out. But look, you can't always just think everything's fundamentally bullish and ignore the charts. The charts are suggesting that we have more downside in silver. And when I look at possible targets, I mean, yeah, there's some chop in here, maybe 1740, something like that. But an extremely strong support would be here, about 16 bucks. So I just went ahead and put that in there for massive downside potential target. We always have to make sure we're being mindful of downside. And so we're doing that. I think the chart's saying, it's showing some intermittent weakness, just like everything is, right? How far down we go is to be seen. But silver's chart is a little tougher for me to read, honestly. I'm having a tough time with it. We're just going to have to wait and see what it does. I think the equities are much more clear, and that's what we're trading anyway. So I'm not necessarily worried about the silver spot price. I can tell you, though, that in the case of the gold spot price, it is much more clear to me. I think, let me point something out to you on the daily. So after getting this rounded bottom, we had a nice rally, all right, and we failed to get above the 200 on that daily. But if you watch the uranium portion of this video, I showed you the potential for an inverse slanted neckline head and shoulders. And you can see that we are putting in the same potential right here as we are over there. I don't think that's a coincidence either. We're starting to see that same kind of strong confluence between gold, silver, and uranium that we've been seeing before. And I think this is a very positive sign because it's going to make it very easy for us to do the technical analysis on, thanks to all the confluence that we're getting. So once again, I think we have two options in the gold and silver space. One, see the near-term immediate price action. If we can get it to kind of roll sideways and do something like this, that's telling us most likely we're going to get this other shoulder for an inverse head and shoulders, which would be a very powerful move to the upside. I think in the worst case scenario, we simply come back down here and we retest this level. I do not foresee us breaking this level or breaking this trend line. Okay, I have no fear whatsoever in the gold space. Or the equities for breaking these lows. I think that we've already put them in. We might retest them, and that's okay, especially if we get the bounce. It's extremely bullish, right? But I'm not worried about it. I think that it looks pretty good. We're just experiencing broad weakness. I think gold is actually holding up quite well. If you come down to the equities, let's look at SIL real quick. I mean, look, you're putting in the same kind of patterns here. So you can just see that we're going back to $23 on SIL. I mean, it's just so close already. But it should offer strong support. And again, SILJ, we have a little further to go. But I want to point out to you, look at the same pattern. Slanted neckline, potential head and shoulders. I can see this playing out all day. I think that's something to be looking for. Again, watch for some potential sideways price action to see if we can turn around and go up. If not, no big deal. Come back, retest this previous low, and I will be looking to buy on support on an equity by equity basis. Again, you come to AG, you see the same exact pattern. Lots of confluence here. Reiterate one more time, you're seeing the same thing in a lot of the uranium equities. Slanted neckline, potential for an inverse head and shoulders. I'm loving it. So again, let's see if we get sideways, see if we can break up. If not, let's come down and test that bottom. I don't think we break that bottom, not in the case of gold and silver equities. And it all looks roughly the same no matter what you're charting. I think if you missed the buys the first time, you're getting a second chance to snag them the second time. And, I think that this is a really good opportunity in the case of Agnico Eagle, such an extraordinarily long-term powerful buy trend right here, okay? If we come down and test it, we're not doing anything other than retesting it. Look, that's what we did back here. We came down and put in a double bottom right here. We came and put this W in on this last time. And look at the correlation from right now all the way back to this last time. Excuse me, this is the daily chart. Come back out on the weekly. All right, so the last time we were this oversold, you have to go right back to here. And what do we do here? We put in a strong bounce, and then we came and we tested it. And what are we doing right here? We put in a strong bounce, and it looks like we're going to come back down and retest it. That's not bad. I think it's good because maybe you didn't have money here. Maybe you didn't listen here. Maybe you have more money now than you had back then. Good. Now you get to buy more at a better price. I think this is very good. I am not worried about gold and silver at all. Very bullish on them broadly for fundamental reasons and the technicals. The technicals are still screaming buy. So if you get afforded this opportunity, I think you pretty much have to take it. I want to point out to you, PAAS, Pan American Silver. It's had some pretty weak last couple of weeks. This is for fundamental reasons. Their all-in sustaining costs have gone up by about 20%, and their profitability has gone down a bit too, right? And so they're suffering for these reasons. And so I put in a new support level here. I think if you can catch them around $14, that'll make them a pretty nice target. Okay, very nice target at about $14. Right now, I think you're still catching a knife. I think on a technical basis, sure, you could catch in this chop right here, something like $16. Nice round psychological number. Yeah, but 14 would feel real good. So if you're a fan of PAAS, I'd wait to get in about $14. That feels like that would be really strong right there. And it'd be just a little bit too oversold at that point anyway. And the time would likely coincide with a strong rebound on the retest of these other levels and the other equities. So $14 for PAAS looks pretty good for me. Again, just go equity by equity. They're all showing the same kind of oversold historical levels. And a lot of them, you know, they put in the same chop or double bottoms there as we're doing here. I see so much confluence in the gold and silver space. I just can't get over it. I think everything looks great. I think you can just continue to buy with confidence. Everything's going to be okay. Don't get shaken out. So unlike uranium, which had and showed a lot more weakness and failed some significant patterns, right? Some very powerful patterns. Gold and silver are not doing that. They're simply trading down and putting in potentially bullish patterns for reversals. So this is all very good to me. So just to reiterate one more time, very bullish gold and silver. Nothing's changed here. Continue to accumulate with confidence.